The first thing is the Paycheck Protection Program, which went live today for a lot of banks. We'll talk about that. There's the Employee Retention Credit. This is a credit that is a 50% credit for employers who retain employees. It's only available in certain situations. There's a delay of payment of employer FICA taxes that is delayed over a couple years. This also interacts with some of the other sections of the disaster relief. There's the SBA disaster relief loan, and that is a loan that's an addition to the Paycheck Protection Program, and there's some interaction with those two loans that we're still trying to sort out. There's the emergency paid sick leave. These are requirements of the employer to provide sick leave with their employees, for their employees, and there's also a corresponding credit on the employer's payroll taxes to get some of the money back for their employees. There's SBA loan subsidies, and what that means is that if you have SBA loans, other federal loans, there's varieties of ways of getting the interest, the principal foregone, subsidized, delayed. There's one section which is a correction of the 2017 Tax Act. It's a retroactive bonus depreciation for qualified improvement property. That will benefit some people in that they can go back and amend prior year tax returns that are already filed, if that applies to you. There's also an addition of 5-year net operating loss carryback. We may have some companies that have losses this year, no surprise. So we have the ability to go back and recoup taxes for previous years. That had changed in 2017 where we could only go forward. Now we're able to carry losses back. There's also the extension of payments for defined benefit plans. We won't probably talk about that all today. We probably won't talk about the interest limitations for most Whipwood clients. That won't affect them. And then there's also the final individual thing that we'll touch briefly on. In fact, I'm just going to talk about it here, is that all payments for 2019 that are due April 15th and for estimated tax payments due June 15th, they're all delayed until July 15th. So I'll repeat that again. If you have a tax return that's due April 15th, it's now due July 15th. If you have an amount due for April 15th, it is now due July 15th. The first and second quarter estimates are also now due July 15th. So here's what you have to think about when you're planning for these benefits. If you get the employee retention credit, you can't get the 7A loan. If you defer the employer FICA taxes, you also cannot get the 7A loan. So the employee retention credit can't take the credit if you receive that loan. It's capped at $5,000 per employee, and it can be taken on your 941. The delay of the FICA taxes, we have a delay in the FICA taxes that are due in, if you're paying FICA taxes, you can delay payment of those taxes to 2021 and 2022. We'll talk about the SBA loan subsidies. There are some advantages of having an SBA loan these days, and you can have 6 months of principal and interest and other payments that are paid for by the federal government at this time. And banks are being encouraged to defer other payments on federal loans. and we're going to just skip that, the defined benefit plan contributions. Okay, individual assistance. So this is about, everybody's heard that some people are going to get a $1,200 check. There's some income limitations on that. So if you're a higher earner, you will not get that. You will not get that payment. There are some benefits for making distributions from retirement plans. You will get an advantage if you need to take money out of your retirement plan to help support your business, and you can replace that money penalty-free over a couple years. If you have a home that's federally backed, your lender should forbear that loan for the time being. So I'm not going to go through the rest of those individual things, but they're there. We'll post this slideshow on our website. So if you want to look at it later, you can look at those things. SBA disaster loans. So there are two loan programs. The first one is the SBA disaster loan. It's a very simple application. You go to the SBA website and you apply for that loan. You can, at that time, ask for a $10,000 advance payment on that loan. This loan is available for firms that have no more than 500 employees. There's no personal guarantee up to $200,000 on this loan. We don't know what the criteria is for advancing this loan to businesses. We think there's interaction with the PPP loan, and you can use a PPP loan to pay off the SBA disaster loan. For our clients, most of our clients are applying for both loans, we think at some point they're not necessarily going to close on both loans. So again, it's a very simple application. We think that you need to apply for the SBA disaster loan prior to applying for the payroll protection program. Then here is our ideas about the new SBA 7A loans. They're known as the PPP loans. These loans are forgivable. So that's what has everybody excited about. They think that they're going to borrow the money, and over the next couple months after they get the money, those loans will be forgiven by the SBA. That is true. There's guardrails around this program. The business must have 500 or fewer employees. There's some exceptions with regard to that. If you're a restaurant business or a hotel business and you operate in multiple locations, then that loan can be extended to businesses with more than 500 employees, as long as there are not 500 in any one location. And this loan amount is based on the average payroll for 2019. We just received guidance last night, 6 p.m. Mountain Time, about some important details. And so what you have to do is you take a multiple of these costs in the loan. Salaries, wages, commissions, or other similar compensation, that's wages, not stages, payment of cash tips, payment for vacation, parental, family, medical, or sick leave, allowance for dismissal or separation. For example, if you let someone go, you can still include any payments to that person in your calculation. Group health care benefits, retirement benefits, employer share of state and local employee taxes. Okay, so what's all that mean? If you look at your W-2s, you'll see a box called Box 5, which is Medicare wages. We think that's the starting point. That box will include your retirement benefits in it, but it will not include the payments for employee medical insurance. Most of those payments should also be reported on your W-2 as a separate line item, I think in Box 12. The employer share of state and local taxes, you will have to report that separately. That's not on the W-2 anywhere. What we think that lenders are going to want to see, we don't have confirmation on this because we're just starting to prepare some of the loan packages for our clients. But what we think the lenders are going to want to see are pretty extensive payroll records, 940s, quarterly reports, 941s, W-2s, W-3s, potentially monthly payroll reports starting in January of 2019, and we're asking our clients to give us through March of 2020. One of the other requirements of this substantiation is that you have to prove that you're in business on February 15th of 2020. What you can include in these payroll costs is compensation for individual employees in excess of $100,000. So that means that if you have an employee that earns say they earn $120,000, they have $10,000 of health insurance, they have state and local income taxes of $2,000, they have employee health benefits paid by the employer of $20,000. All that the employer can use is $100,000. So you also do not get to include payroll taxes and income taxes. So those are not counted in compensation. So for example, your FICA and your Medicare taxes that the employer matches on the employee are not included in compensation. And also you can't, if you have employees who are working outside the United States and they live outside the United States, you cannot include payroll costs there. The biggest question that we've had is, can we include costs for our subcontractors? And if you read the law on this, it's a little confusing, but we're certain that you cannot include payroll costs, you cannot include costs for paying subcontractors. We believe that the subcontractors will file for these loans on their own. And I think the language in the law confuses people and is really meant to point to self-employed people who are eligible and able to include their net income in applying for these loans. So how's the loan forgiven? Well, we missed a slide. No, missed the slide. Sorry, I don't have a slide here I expected to have. So what happens with our payroll costs that we calculated in the earlier slide? What happens is you add up all those payroll costs and then you multiply that payroll cost by 2.5 times. So it's equivalent to 2.5 months of payroll costs. And that is the amount that the lender by law is going to lend you. So you will have 2.5 months of those payroll costs. And so, for example, if you had $100,000 a month of average payroll, you will have $250,000 worth of loan from your lender. That is forgivable. And there's some guardrails about being forgiven. So we're also missing there. Okay, sorry. The loan is forgiving by payments for particular costs over 8 weeks. So think about that. You're getting 2.5 times your payroll, but you're only getting 8 weeks to spend the money, so it is totally forgiven. So what are those costs? The advantage is that there's some other costs other than the payroll that's included in that forgiveness. Payroll costs, using the same definition as what we use to calculate the loan. And also you can include interest on mortgage obligations, rents on leasing agreements. I'll defer to Steve Barthmeyer if that means rent on equipment, payments on utilities, and additional wages paid to tipped employees. So this is a planning opportunity about when you might want to get the loans. It's a very difficult issue because if you're in a business that has furloughed people if you're in a business who has cut back hours and you get that loan, you're going to have way more difficulty in getting 100% of that loan forgiven. It is possible to get a partial forgiveness on these loans. I talked to a client earlier and he said, well, I'm worried that the program runs out of money, so I want to apply. Partial forgiveness is better than not getting the loan. And so you will have to talk to your CPA and professional about that particular issue. There's also some other guardrails about how the forgiveness can be reduced. And if you have fewer employees over the succeeding 8 weeks, then that could potentially cause some of the loan to not be forgiven. There's a ratio that you would use comparing the full-time employees over those 8 weeks compared to the measurement period that you used in 2019. If you've reduced your compensation to individual employees by greater than 25%, there's also a cutback in the forgiveness. So what does all that mean? Well, there's one other thing about that, is that if you restore the full-time equivalents by June 30th, and if you restore the compensation by June 30th, then that forgiveness, then that cutback in the forgiveness doesn't happen. So that's our quick down and dirty overview of what's going on. I'm sure that we're going to have massive amounts of questions, and so we'll move into the question part of our format. We will stay here until all the questions are answered. Hopefully that was helpful to you, but I'm going to turn it over to Mona now to kind of proctor the questions. So Mona. Okay, we're having some problems unmuting Mona. So Steve Barkmeyer, are you able to see the questions and ask the questions?
Sure, I can do that. Let's see, first question, let me roll down a little bit here. Can you use these funds to give out cash bonuses to your employees for aiding retention? And the answer to that is yes. The loan proceeds on the payroll protection plan can be used to pay out bonuses. And you know, if you're short on getting to the full forgiveness of the loans, that is one item that you can do, is pay some bonuses to your employees to get the full amount of the forgiveness of the debt. Let's see here. Somebody asked if we will email out the slide deck after the presentation. I don't believe we're mailing it out, but we will have it available on our website. Let's see. Learn about mortgage forbearance before applying. You know, that's probably true. There could be some other aspects of receiving that forbearance on your mortgage. If it's an SBA mortgage, there is, other than the forbearance, there's also a 6-month period where the SBA will pay all of your mortgage payments on the loan that is not, and that's separate from the forbearance program. So let's see, the next question. Is the Paycheck Protection Program based on 2020-T, T12 payroll, or just based on 2019 payroll? And the information that we have suggests that they are looking at the 2019 payroll, but that's not 100% clear. There's conflicting information from different parts of the government on that.
Can you hear me now?
Yes.
Okay, so sorry about that problem with the muting. The thing that I would say on this payroll is it's depending on the bank. I've done a couple applications or started the process with applications for 2 or 3 different banks. Some of them are asking for the 12-month calendar year, but then they need substantiation that on February 15th you still have employees. So that's why I would suggest having your data available for the 12 months of 2019, which is the 941s, the 940s, full payroll reports for the entire year that's substantiating all of those, in addition to the first couple months of this year, which will help substantiate. I will, one thing that we didn't cover that's not on here that I just want to, say is that I've gone on, we've gone on this morning to Chase and to Citywide Banks. They're allowing you to fill out the PPP right now. It's just asking for your name, your, essentially your federal ID number, and then it's saying a banker will contact you. So in the meantime, there's an application and it's called, it's the PPP application. I would have that signed and filled and ready to go. On that application, it has the total amount of payroll you're asking to be forgiven. We went through that earlier on the slide, times the 2.5%, 2.5 times. They're gonna want that signed, and I've Chase and Citywide Banks will schedule a call with you when the bankers received your application, and at that point, you're gonna submit it. So this is where we're referencing, please have those documents available. We're not quite entirely sure which documents are going to be needed. Again, it's the 941, it's the 940, the payroll reports, health insurance invoices for the entire year of 2019, retirement plan invoices for the entire plan of 19 if you're substantiating that as well. Steve, do you want me to run through? I'll just keep running through those questions. Can you include employer health care contributions for employees who earn more than $100,000? Yes, you can. You just cannot include the compensation for the employees that earn more than $100,000 in the calculation, but that is correct. One site says not to. One
clarification on that item is that the total is limited to 100,000. So the health insurance payments are included in your grand total, but then you have to cut it back to the 100,000.
Oh, did not know that. So clarification on that. Good. Define the loan origination date. Steve, do you want to do that?
I think that date is the date that the loan closes. We have seen some information out there that suggests that it might be the date that you apply for the loan, so it's not clear.
Somebody else had asked about, on one slide it said state and local income taxes or taxes, it said on there. So essentially the taxes, the income tax portion is not included. What's included in that calculation is your unemployment tax. And if you are in this, if you're in a city that has occupational privilege tax. So we believe you would include the state unemployment tax and the local OPT tax as part of that state and local reference that was made on that slide. Should we use the 40 hours a week to calculate full-time equivalents, or is it even less than that?
We don't know the answer to that.
That's another one that's unclear. There's some guidance from the SBA on a different program that uses 30 hours per week. We're not sure whether it will be that 30-hour a week number or the 40-hour a week number.
Can you include contributions to a cash balance defined plan as a retirement contribution?
Yes. Yeah, the one thing with that, though, is that the majority of those contributions tend to go to people who make more than $100,000 per year, so it may or may not really help you much.
What about employees that are full-time that see a drastic reduction in compensation due to commissions? So your calculation is going to be based looking on a backward basis. So you're going to divide that by 12, and then you're going to get the loan. And then possibly, of course, the commissions are going to be down when these folks come back on and you're back allowed to be back in business and selling, so to earn the commission. So we suggest taking the entire loan and then perhaps maybe not using it all if you cannot substantiate the expenses. So if the commissions go down and your payroll goes down, then you just wouldn't use the whole loan. Is per diem included in the payroll calculations?
One other comment I would make on that is that this loan is carrying an interest rate of 1% and is paid back over 2 years. So if you have some of this loan that is not forgiven, you just might need the money anyway. So you may want to take the full loan and then pay that back at some time in the future. And also take the chance that they change the rules about when that gets paid back. That's a good point. Yeah, there will be many, many revisions to what we know today over the coming weeks and coming months. So we're telling you what we know, but there may be adjustments. There may, depending on how the economy goes and how this virus continues to sweep our country, there may be more loosening of these rules.
Okay, so for owners of LLCs, they pay themselves via distribution instead of salary. How are these distributions considered?
That gets a little bit complicated. Basically, for the company's payroll protection plan loan, the distributions to the owners do not come into play at all in the calculation. However, our reading of it is that those owners can then apply separately for another loan based on their self-employment income, and they can use the self-employment income like its wages for applying for that loan.
And that loan application does not open up until April 10th for self-employed people. I will also add that if you're an LLC and you have guaranteed payments, we believe the guaranteed payments are then again included as if you're self-employed, and you would do a subsequent application on the guaranteed payments individually, which is again open April 10th. Are expenses for leased equipment eligible to be paid with these funds?
And I think the answer to that is yes. There's nothing that addresses the point of saying that equipment leases count, but there's also nothing in the language to suggest that it's only real estate that counts. So, you know, for right now, I would include it in the calculations, at least unless further guidance comes out.
Included in the calculations on the reimbursements portion, because it would be used on the reimbursement portion, not on the loan itself. Right. Can monies be used to recruit headhunter fee to bring on new employees? I would say no. It just needs to be through W-2. That's the most important thing. You can't substantiate that 8-week portion with anything but a W-2. No 1099s. Again, it needs to be run through your payroll. If employees were laid off after February 15th, do all employees need to be rehired by June 30th to get the loan forgiven? Or can we use the funds for payroll for our current team and any that we bring back?
And on that, there is a reduction of the debt forgiveness based on your reduction in full-time equivalents. That reduction gets eliminated if you bring the employees back by June 30th. So, you know, in general, you will want, if you want the loan forgiveness, you'll have to bring the employees back or it will be cut way back. And in total, it's actually more beneficial to you to pay those employees during that 8-week measurement period, because not only does that give you wages for the loan forgiveness, but that also eliminates that cutback in the loan forgiveness.
And again, the loan, there's a timeline. Last week, we had thought it was a 10-year loan. They have updated that to a 2-year loan on the PPP, 1% over 2 years. We are not sure exactly how that full-time equivalent is calculated. A couple people are asking questions on that. That is still a gray area for us. So the full-time equivalents for the original application is, of course, your full-time equivalents looking backwards. Going forward, it should be for those 8-week period of when you're getting the money and putting it to use. You do not need to submit a business prepared plan as part of the application process that we're aware of. I've read all the SBA interim final rules on the PPP, and it says that monies can be used for interest payments on any other debt obligations that were incurred before February 15th. Do you have any insight on this?
And that's certainly an allowable use of the money. In terms of getting the loan forgiveness, one thing that I don't think we've mentioned that the SBA just put out last night is that even though you can count these other expenses toward the loan forgiveness, at most 25% of the costs that are applied toward loan forgiveness can be for something other than payroll. So that's an additional limitation that wasn't out there until yesterday.
Correct, and it could be that your health insurance, your rent, your retirement plans already are exceeding that 25%, so it might not really be that important that you have the interest obligations as well. There are 4 owners on a company. Do we need all 4 owners to sign? I have not done that. I believe it's just the main, whoever would be signing on most things. It's not an electronic application. It is a paper application. You need to print it out, sign it. You really have a lot of questions, 2 pages of questions that you're answering on that, signing away some things that are specific to you, and then I think you just push that into the bank. Should I submit the disaster loan if we are closed? Yes, submit the disaster loan. So this is a hair salon. They've already closed. The order needs to be the disaster loan first. Then you would do the PPP. The only thing that it's going to matter on the PPP is that $10,000 will, I believe, be taken off of the amount that you're eligible to forgive on the PPP.
Mona, they also announced yesterday that they will reduce your loan amount that they give you by that advance as well.
Okay. I know there were some things hot on the presses last night at 10:30. So now that I understood it as well, it is capped at $100,000 per highly compensated employee, including all costs for that employee. And I did not know that until today. So that's a good clarification. So I'm going to have to back off some of those health insurance. So which box of the W-2 should we be reviewing for the grand total? I believe it's box 5 of the W-3, really. For 2019, your W-3 is the summary of all your W-2s. Box 5 is the total of Medicare wages. So I believe what I've been using, what I've been trying to use is box 3, back off the extra of the additional 100,000 folks, then add on the health insurance, add on the retirement, add on the state unemployment. If there's any OPT, take that number, divide by 12 times 2.5. And again, I was trying to create an Excel spreadsheet that would give this as a formula, but then Bank of I think BOK came out with their own little spreadsheet. So I wouldn't be surprised if each bank has their own calculation summary that they're wanting you to submit. Again, a lot of these banks are scrambling right now, so I'm sorry that somebody had asked if we thought they were going to run out of money because the banks are behind with the login procedure. Rick, do you want to comment on that?
Yeah, one thing to be aware of is I think the banks are kind of forced to get this thing online. Last night in the president's call, the Treasury Secretary Mnuchin said that all the banks will be ready today, and the SBA guidance hadn't been issued at that point, and so I think the banks are kind of scrambling to act like that they've got this stuff already, but the reality is that the banks don't have it ready. I would expect that the process will change dramatically in the coming days. So we'll wait and see. We're trying to put together what we still think that they need. There are some SBA forms out there that one bank has told us that that's what they're going to need. So just stay tuned, get as much stuff as you can to get ready, and then see how this plays out. I think there is a real worry that the money will run out on this program, and that's what has some people willing to apply for this loan, whether they think it's going to be forgiven or not. I would suggest that if the money starts running low, that the government will extend and put more money into this program. There is there's another set of laws that are on the drawing books right now. They're in committee. They're working on that. We'll see what that brings, but I think in another week or so we'll see what else is going on.
Okay, so can we include part-time employees? Yes. Can on our payroll figures, does the owner's portion included? Yes, the owner's portion is included on the PPP. For sole practitioner, what about workman's comp? Workman's comp is not included into the calculation. For sole proprietors, companies that can be included in the calculation when the owner does not get actual payroll for the S corporation, is there any way to I think you should call us on that. I'm not quite sure I understand the question on that one. Is per diem included in the calculation, payroll calculation? I don't think it is.
No.
No, okay. Again, if we laid off full-time equivalents and bring them back by June 30th, beginning June 30th with no back pay, there shouldn't be a penalty, correct?
It's correct that that won't cause a reduction in the loan forgiveness. However, if the 8-week measurement period includes part of that time when they weren't there, you won't have those wages to count for the loan forgiveness either. Okay.
So there's a little bit of questioning on the S corporation. So if you're an S corporation and you're the owner of an S corporation, you're getting a W-2. That is what's included in the loan calculation, not your distributions. If you're the owner of an LLC and you have profit from an LLC, then that's a different calculation. So again, S corporations would only use their W-2s, not their distributions. Should we apply for the 7A after you've applied for the disaster loan? Disaster loan goes first. Is the disaster loan a prerequisite for the PPP? The way I view the disaster loan is you have the option to take it or not. It's money to help you fund your business for the oncoming months. The PPP is the forgiven portion of it, but they're not allowing you to do. They're allowing you to do the disaster first. So we're recommending our clients do the disaster. Kind of always. I don't really have too many situations that we're saying not doing it, that maybe Rick or Steve can comment on that, but we're kind of saying, why not, just in case you need it, you don't have to take it, but then you do the PPP. Is that what you guys agree with?
Yeah, I have a couple of situations where I'm recommending they do the disaster loan and not the PPP. And I think you can also have a corollary to that where you do the PPP and not the disaster loan. I think that is one of those issues that you need to parse with your CPA.
Yes, agreed. The $100,000 limit is enforced for employees and employers. Anyone that's on the payroll, I guess now including their healthcare costs, are both included in that $100,000 cap. Are there any tax implications for this forgiven loan? This is the best thing about it, is that it'll be an adjustment on your tax return. It's going to be forgiven, so no taxable income whatsoever. If you are using it for qualified expenses, those that are not qualified would again be converted to that 2-year loan and would be taxable. Are VC-backed companies excluded from any of this?
That question can get a little bit complicated if the venture capitalist company is in control of your business so that they have the majority of the ownership. Then your business might have to be combined with other businesses to calculate whether you've got the 500 employees or more. So that there can be some effects of it, but in general, there's nothing that says that being partly owned by a venture capitalist causes you to be ineligible.
If business leases are paid to the same owner-occupied business, do those rents qualify? They do, because it should be typically to a separate entity. You're paying rents to a separate entity, and so yes, that is qualified. Those rent expenses. They're going to ask for leases. I've seen something that's asking for a qualified lease, that's saying this is the monthly lease payment. It should be dated as of February 15th. That this is my monthly lease agreement. I know some of our owners sometimes don't have those, but that would be something I would get when you're going to have to justify. Make sure you, I know you've been doing it, but just make sure you get it papered up. I'm going to skip that one there. We've kind of talked about that. We use a co-employer. We have access to the W-2s, but go ahead.
On that co-employer, the rules do address co-employer arrangements so that if you're using a PEO, you still get to count that payroll as your payroll.
We submitted our PPP apps in yesterday. They weren't available yesterday, so I'm wondering if that's a disaster loan. We added the benefit of the IRA dollar over the 100 cap, and I think you're gonna have to call us separately on that because they weren't available yesterday. The only thing that was available yesterday was the disaster loan. What is the process to show how the PPP funds are used? Again, my recommendation, I think it's gonna be a line of credit. This is just me guessing. When you have payroll, you would then say my payroll is this. You would transfer that exact amount out of payroll into your checking account, pay the bills. Very clean accounting. I have pay rent out of there. I pay health insurance out of there. I pay the IRA match out of there. Just so you're substantiating it exactly the utilities. I would not transfer the money directly into your checking account because it's going to be harder to track for your accountant. So that would be good. We have a restaurant that's in mid-construction, no employees yet, but we're in excess of $15,000 a month outgoing, would be eligible for the SBA loan.
And the answer is, unless it's part of a larger business that covers other restaurants, then no, because you have to be in business on February 15th, 2020 to qualify.
Somebody had said that the PPP loans are on a first come, first served basis. That is true. That's why they're considering doing the PPP first. The disaster loan is 20 minutes. It's not a big deal. It's very easy. You need to have your birth date and where you were born and last year's revenue and your federal ID number, Social Security number, addresses. It's a very easy application. What is the process of engaging with our firm to help you prepare the applications and documents? So kind of what we're doing now, we kind of have a two-pronged approach. We have the approach where a lot of our clients are wanting to do it on their own. We're just consulting with them, walking them through the application process a little bit and kind of giving them advice. Alternatively, we have some clients that are a little overwhelmed and just want us to do it. They're busy trying to keep their business together. So in that case, we send out an engagement letter. Included in that, we have you sign the form, and then we are gathering your payroll reports. We're coming up with the calculation. We're asking you to gather the health insurance and the retirement, and then asking you for your banking information and submitting it. We've submitted several today, but again, as I mentioned earlier, they're in the holding process. The bank is waiting to get back in touch with us. So we have not heard, I have not heard personally back from a banker yet. I know that they're just, right now, I believe it's lining in the queue, if you will. And then if we apply, I think we've already talked about that. If you apply for the PPP now, are you still able to do the disaster loan later if needed?
And the answer is no. Once you apply for the PPP, you're not eligible for the disaster loan anymore.
And I think, how will the forgiveness portion be calculated as the forgiveness portion be calculated, same as the calculation to the loans that are applying? The forgiveness portion, again, is you just have to track again over that 8 weeks, your payroll, your health insurance, your rent. They give you 2.5 times because they're giving you a little bit more to pay for those outside expenses. Should you submit the PPP now if you don't know the government will allow you to open? I think our belief is you submit it. So this is a restaurant. These are the people that are officially shut down by the government. They're not allowed to work. We are saying apply for it. We believe, or we're hoping, we're still trying to clarify that once that loan becomes active, that you're able to, Steve, you might be able to classify it better, but when the loan becomes active, you're able to, a PIC is not necessarily, you'll be able to use the funds when those employees come back to work? Anything specific on
yes,
that?
and I guess the first thing is that you can use part of those funds for paying your employees even though you're not back open again. And then, you know, you do have to pay out the wages during the 8-week period in order for it to qualify toward your loan forgiveness. So it's a little bit of a complicated question. It's probably
It's a little hard. We haven't heard specifically from the banks or from the SBA, because if I'm you guys, I would say, well, what people are already furloughed, they're already on unemployment. So technically we're supposed to be able to go back, fingers crossed, May 1st, the world restores to some sort of normalcy. Then I would be able to pick my date that I want my 8 weeks to start on May 1st, even though I might have gotten my loan on April 20th. Again, that is something we're not sure of. But you know, it is a first come, first served thing. We believe so. I wouldn't not go get the money because you're not in business. I think I would deal with that back, you know, afterwards. What percentage needs to be used towards payroll? 75% is used towards payroll. And it's the payroll for the full-time equivalent to February of 2019. And is it payroll? And is it payroll for full-time equivalent to February of 19? I think it's the full-time equivalent of where you were at the end of the marking period, which would be December 31st, 19, and then where you land on June 30th, 2020. Again, those are kind of specifics, and I know they're very important, but
yeah, and I think there's actually a couple options on. Oh, I was just going to say, I think that there's actually a couple options on the time period that you use for measuring the base for the full-time equivalents.
Oh, yeah, you're right. If it's seasonal, there are some. Is health insurance premiums the 25% of forgiveness, or is it included in the 75% payroll? It's included in the 25%, not the 75%.
No, that it's in the 75%.
It is? See?
Yeah, the health insurance falls under your payroll costs.
Okay. All right, so that's the last. Is there any idea on the time frame from application to funding?
I have no idea.
No idea. They said it's going to be a quick turnaround.
Yeah, we heard last week from Chase that it would be 24 hours, but we have our doubts.
Yeah. I did hear of somebody getting their disaster loan, their $10,000, here just a couple days ago. I don't know how long it took for them to, I don't know when they put that in for the application, but somebody has received $10,000. So there's that. Just to clarify, can we apply for a disaster loan and separately the PPP? You have to see them separately. The disaster loan is through SBA.gov. Find the disaster loan application on there. The PPP is directly through your banker. A lot of bankers are requiring that you have an account with them as of February 15th, 2020. Chase will not let you do an application with them if you were not in their bank. So try to speak to your existing relationship first, and then and I have not had somebody's asking me if I've done anything for U.S. Bank. Right now I'm with Citywide, Bank of Oklahoma. I've seen something come out for Chase. I have not seen anything come out for any of the other ones, but I haven't been online for a while, so I'm not sure. I missed the maximum amount allowed for the disaster loan after the 10,000. That's a good question. We're not sure how they're going to fund you. It's a loan. It's a 30-year loan that they're giving you. So you get the 10,000 forgiven, which is a reduction also against your PPP. It's not the same thing. So if you know, it'll be modified against your PPP. The first $10,000 is forgiven. It's a grant. And then if you were to get a loan for $100,000, we don't know how they're going to calculate that. You guys know how they're going to calculate the additional amount of the disaster loan that'll be at 4% over 30 years?
No indication.
I haven't seen any information.
Okay, clarification. If health insurance premiums take an employee over 100,000 with their total compensation, do we have to cut the total 100? So
Yeah.
again, it's the $100,000 is included in the calculation with the health insurance, but you can pay your employee whatever you want to pay your employee. You just will not be able to include that extra amount included in the forgiveness portion. U.S. Bank is sending online application links to their business client in waves so they do not overload the system. Is it better to stay with your banking firm if they are not processing yet? I would stay where you are. I would not switch banks because you have a relationship with the banker. Your account's been there.
I would
not.
I'd have one qualification
might
for that. If your lender
Okay.
is not an SBA lender, then you may actually have a problem getting a loan through your bank if they're not already doing SBA loans.
That's true. That is a good clarification point. Yeah, okay. And then can you prepay the disaster loans? Yes, and there is no prepayment penalty. Okay, we are right at an hour. We got a couple more. Which loans require personal guarantee? The personal guarantee goes in on the disaster loan, I believe, right, Rick? After the, there's some 25,000. Yeah, so if they give you a loan for more than 25,000, then there's some collateral perhaps or some personal guarantees. And can you apply for both the PPP loan and the disaster? Yes, the order goes disaster loan first, PPP secondly. You cannot apply for the disaster loan after you've already applied for the PPP loan. If applications are aligned, are they expecting all owners to sign manually and upload the attachment? Again, it is one owner, one federal ID number, one owner sign, one owner submits. I've been told by 2 banks that they're only accepting applications if you had business checking as of 2/15. That's correct. They're trying to prioritize.
Yeah, and so on that signature on the guidance last night, they said they would accept electronic signatures.
Oh, okay.
Yeah, I think that's up to the individual banks, though. The SBA allows it. It's a matter of whether your bank will allow it.
Correct.
Okay, so that is the completion of my questions. If anybody has any additional questions, maybe Jake, you can pull it back to our page with our contact information. And if you're not, if you can go ahead and reach out to us. Again, we are just trying to learn as much as you guys are. And so wish you guys the best. Hope everybody can get through this process this week and into next week with some sort of success, and we can get back to some normalcy. Okay. Thank you so much for joining us.
Thank you.
Thanks.